You need to hear this if you're an investor. IRCTC, the Indian Railway Catering and Tourism Corporation, is a giant in the Indian travel scene. They handle everything from booking your train tickets online to serving up meals on your journey. And guess what? They're listed on the stock exchange, which means you can own a piece of this profit-making machine. We're talking internet ticketing, catering, packaged drinking water with their Railneer brand, and even tourism packages. This company has its fingers in all the pies. Think about it. India has a massive and growing population that relies heavily on railways for travel. IRCTC is the go-to platform for millions, and their business is only getting bigger. All right, let's get down to brass tacks. IRCTC's Q2 FY25 financial results are out, and it's time to see if they're on the right track. We're talking revenue, profit, and everything in between. We'll compare these numbers to the same quarter last year, Q2 FY24, to see how much they've grown. Remember, we want to see consistent growth. Are they beating analyst expectations? Are they lagging behind? We'll break it all down so you can see if IRCTC is a stock worth adding to your portfolio. Stay tuned. First, let us understand their business. IRCTC isn't just a one-trick pony. They've got their hands in a lot of different businesses, and we're going to dissect each one. First up, internet ticketing. This is their bread and butter, the service that put them on the map. How much revenue did they generate from online ticket sales this quarter? Next, let's talk about catering. Food and beverages on trains are big business, and IRCTC is the main provider. How profitable is this segment? Then there's Railneer, their bottled water brand. It's a staple on trains and a growing player in the market. Finally, we'll look at their tourism segment. Do people book tours through IRCTC? We'll find out. Solid tracks, financial strength and stability. We're not just looking for short-term gains here. We want companies with a strong financial foundation, and that's what we're going to examine next. How much cash does IRCTC have on hand? This is a key indicator of their ability to weather any storms. We'll also look at their cash flow from operations. Are they generating enough cash from their core business activities? What about debt? How much debt is IRCTC carrying, and is it manageable? In Q2 FY25, IRCTC reported a year-over-year revenue growth of 7.2%, while expenses increased by 11%. Their profits surged only by 5%, and diluted earnings per share, EPS, rose by 4.6%, slightly lower than the 5.4% YOY growth in profit before tax, and lower than the 7.2% YOY revenue growth observed. They even announced a dividend of rupees 4 per share. Record date for this is 14th of November 2024. In catering, their YOY revenue growth was 14.56%. In Railneer, 15.98%. In internet ticketing, 13.34%. But in tourism revenue, dipped by 17.69%. However, in catering, their YOY profit growth was negative 3.13%. In Railneer, 3.32%. In internet ticketing, 11.43%. So catering and tourism are not performing well. For Q2 FY25, IRCTC reported a cash flow from operations of rupees 500 crores. Their total debt stands at rupees 820 crores, which is well within manageable limits. Let's dive into the financial ratios. The current ratio stands at 3.34, indicating strong liquidity. The quick ratio is 3.33, showing that IRCTC can meet its short-term obligations without relying on inventory. The debt-to-equity ratio is 0.23, reflecting a conservative approach to leverage. The return on equity, ROE, is 17.47%, indicating efficient use of shareholders' equity. For detailed analysis, please check out our podcast. URL for podcast mentioned in description section of video. Destination growth, opportunities and challenges ahead. The future is never certain, but we can always look for clues. What opportunities lie ahead for IRCTC? India's rail network is constantly expanding, which means more passengers and more potential customers for IRCTC. Digitalization is another massive opportunity. More and more Indians are getting online, which could lead to even higher growth for IRCTC's digital platforms. But it's not all smooth sailing. IRCTC faces challenges like regulatory uncertainty and rising inflation. There are other challenges like catering tariff dispute, arbitration award dispute, and profit-sharing dispute. We'll explore these challenges and see how the company is addressing them. As we wrap up our deep dive into IRCTC, let's summarize the key points with a quick good, bad, and ugly overview. The good part. IRCTC stands on solid financial ground with a diverse portfolio that includes catering, travel, and online ticketing. The growth potential is immense, especially with digitalization and an expanding rail network. This means more passengers and more opportunities to generate revenue. The bad part. Regulatory uncertainties and rising inflation pose significant challenges. These factors could impact profitability and operational efficiency. The company needs to navigate these hurdles carefully to maintain its growth trajectory. The ugly part, ongoing legal disputes. The competitive landscape is fierce, and any misstep could lead to a loss of market share. Missing review of the subsidiary company's financial statements independently to ensure data accuracy and completeness. Additionally, any technological disruptions or failures in digital platforms could severely impact customer trust and satisfaction. Understanding these facets, both the promising opportunities and the daunting challenges, will help you make more informed investment decisions. Stay tuned for more insightful analyses, and remember, knowledge is your most valuable asset. Thanks for watching. Don't forget to like, share, and subscribe for more in-depth financial insights. Also check our podcast for more details. Until next time, happy investing.